This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds to give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. The Planet MicroCap Showcase Vegas happening April 30, May 2nd, 2024 at the Paris Hotel and Casino in Las Vegas is around the corner. Our event brings together the best investors and thought leaders in microcap, quality microcap investing opportunities, and above all else, the most fun and highest return on your time that you could ask for. If you'd like to register to participate, please visit planetmicrocapshowcase.com. See you in Vegas. Now, my guest on the show today is Maj Soueidan, founder and editor, and Jan Svenda, senior equity analyst at GeoInvesting. We're trying something out here at Planet MicroCap where on a weekly or bi-monthly basis, Maj and Jan will be hopping on the show to discuss recent performance of their Tier 1 quality microcap index, as well as the latest and greatest they have been covering on the MS MicroCaps Substack and the GeoInvesting Newsletter. We're also going to spotlight some names from their index inspired by their recent performance. For example, in today's inaugural episode, we covered SPAR Group. Ticker is SGRP, and FitLife, ticker FTLF. As part of our conversation on Classic InfoArb, short for Information Arbitrage, Maj and Jan also cover Taylor Devices, ticker TAYD, and Crawford United, ticker CRAWA. We discussed a number of stocks during our interview today. Maj and Jan also may or may not own some of the companies that comprise their Tier 1 quality microcap index. Please see MS MicroCaps and GeoInvesting for full disclosure. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Maj Soueidan and Jan Svenda. Dudes, thank you for joining me today. How you guys doing?
Good.
Hey, Bobby.
All right, very cool. Thank you guys for joining me. So I just want to give a quick preface, and I said a little bit in the intro, but I'm going to say it again here. So what we're going to be trying to do on either a weekly or bi-monthly basis is we want to kind of take our weekly wrap-up to even a next level. Right now, we put out on the Planet MicroCap Substack newsletter our weekly wrap-up of what's been going on in the Planet MicroCap Index. Kind of gives a general overview of what's going on in microcaps, but we did an interview with Maj and Jan about, what was that, about a month ago, something like that. But where we talked about their MSM Tier 1 quality index, and we thought it might be kind of fun to actually have them on, like I said, on either a weekly or bi-monthly basis to kind of go over the performance of that Tier 1 index, as well as some other things that might be on their minds, because they publish in my opinion, one of the best microcap newsletters in the game. And they didn't pay me to say that, I promise. But with that, not yet. So Maj, Jan, I figured we'd start off with, before we get into kind of overall performance, give me like that quick, 1 or 2 lines exactly what the MSM Tier 1 quality index is for anybody that missed that pod. I'll put a link in the show notes for that one, but just a quick overview so that people know what we're talking about, and then we'll get into the last week's performance.
Sure, Bobby. Thanks. And just to be clear, Jan works for MS MicroCaps and Geo, so he's an analyst for both my companies. I think earlier you said Geo, but he's my analyst on both sides of the coin there. So he's really been a big part of launching MSM with me over the last 2-3 years, trying to get it all ready. But think of MSM as the pipeline of research that kind of fuels Geo.
And to clear things up, MSM stands for MS MicroCaps. Their newest.
Yes.
Okay.
And the M is for not my name, or Miss, like you thought. Although we are in a very, interesting time.
I still like Miss MicroCap. Microcaps. I think that's hilarious.
Hey, don't joke about that. I'm gonna sue you. The M stands for momentum, like price momentum. The S stands for sustainability of business. And of course the M The last M stands for microcaps. So we're looking for these, really stocks that can maybe have good price momentum in the near to medium term, that have sustainable long-term kind of businesses in the market that beats the market, that beats all other markets in microcaps. Now, really quick then, so these are my cliff notes, and these are my MSM is basically a compilation of my cliff notes that kind of I've always written down anyway, and I would pick which ones I would want to bring to Geo. And so I decided, why don't I just make that a whole platform and just put those all out there? So because Geo is more of a big platform of videos and morning emails, weekly emails. There's a lot of information going on there. MSM is a very hunting ground for all these stocks. Very a much more focused kind of slower product on that whole thing. So now, so our goal here really though is to build this tier one universe over time. So right now there's 87 cliff notes, and every cliff note goes into what we call our tier one quality index. And we've been building this index now for 2 years. So I think what you're going to see happen over time, it's going to become a great hunting ground for the best quality, nanos and microcaps in North America, US, and Canada right now.
Cool.
And the performance has been pretty incredible. And so we're really happy about that. And we're going to talk about some of the things we're doing next year to really kind of continue to add value to our members and subscribers who are subscribing to it.
Very cool. All right, that was a perfect overview. And I think, like I said, for anybody that wants to hear the full conversation where we get into some of Maj and Jan's criteria for the Tier 1 Quality Index, all that stuff, we cover that in our, I guess we can now call it our intro pod at this point, or also go subscribe to the Substack, and they outline all of their main criteria for the index itself. So, I think, Maj, should I throw it to Jan for the performance? So we're recording this for everybody to know on Monday, April 8th, 2024. We're going to be covering data that tracks from April 1 to April 5, 2024. This is a new kind of thing. So we're going to try and do this on Fridays most weeks, but we're recording on Monday the week after. So, Jan, how did the Tier 1 index do last week?
I'm going to share my
For
screen real
sure.
quick so y'all can.
Yeah, exactly. I
Okay.
wanted to
All right.
ask. Yeah. And actually, for the performance that we have on the presentation, we actually have the monthly data. So we will be talking about the weekly movers, but we can talk about the monthly performance of the index. And yeah, if Maj, you just go on the next slide. I mean, which is the disclaimer, obviously, but Bobby has that covered, I'm sure. On the chart that you're going to see is basically a comparison of the CliffNote index, or the tier 1 quality index, versus SPY and NASDAQ over the whole period, so until March of this year. And you can see that basically the whole thesis behind the index is really working very well, even as we add more stocks, right? So the whole idea is that we can pick the quality microcaps that are going to outperform the market over the long period of time. And it's happening in real time right now. We've started in February 2022. And since then, the index kind of started to outperform the broader market, SPY and NASDAQ. And for March, we had about 7% gain. It was really like a blowout month for us. And now, we are up basically up slightly over 40%. In terms of all the stocks in the index, right? So that's on average the current return, and you can see the SPY is compared to our index is maybe like down 10-15% or something like that. So that's a huge difference. And we added 5 stocks for March, and the return has not been getting worse. So we're really confident in actually that the quality stocks that we add over time, they really perform well. And they don't really damage the performance of the index. So we're very happy with that. And that's you live and die by this, right? Like you have to outperform the market. Not a lot of people do. We're doing it in a big way. So we're very happy with that. Right now, as Maj said, we are 86, 87 stocks. It changes as we add more stocks. But yeah, that's the wrap up for the month.
We had one more last night. That's why it's not on there. So.
Yeah, exactly right. But that's it. We're very happy, and there's a lot of stats on the Substack that talks about the performance a bit more, and how we drill into it, and how we had already 22 multi-baggers, basically stocks that return over 100%. So, a lot of good things. We obviously had also stocks that lost a lot, but since this is a passive index, we don't remove anything. So, once we add it, you can just track it, and it's very, very transparent, and yeah, clearly shows that there's something to it. There's something to, Maj's investing track record for the past 30 years. Like, who would not know, of course, that, it's a great one, and we're delivering. Yeah.
We're at about what, 70%, around 67% of stocks are up, and the rest, that's kind
Yeah,
of
that's kind
right
of like
now.
really the historical hit rate that we've been hitting. Yeah, 2/3 are up, 1/3 is down, but on average, stocks are up above 40%. So
Well,
yeah,
I think we're going to try, and I think that's going to, we're really concentrating more now on even more quality. When we first started the index, I was fooling around a little bit and put some like less quality stuff in the very beginning here and there. So I think the quality of stocks are going to get stronger. So my goal is to try and get to 80% success rate if I can. Um, that's where I was early in my career, many years ago, and I want to see if I can replicate that too. But what's cool about this, Bobby, is that it's showing that diversified portfolio of the high quality nano caps can produce great returns.
Cool.
And there's this whole like concentration versus diversification thing.
Mhm.
And it's great to be concentrated if you're right, but but you don't have to take as much risk and you can have some really good returns.
100%.
But you have to be willing to own a lot of stocks. And I don't, Jan and I are still trying to figure out, what's the optimal amount of stocks maybe to own the index? We obviously, I don't think the average person can own 86 stocks, right? So we're trying to figure out now, what do we do next? And that's what we're going to talk about a little bit later here.
Got it. All right, so let's head to that next slide, because I think you also have your movers top.
Yeah.
Okay.
Yeah. So and this one thing I want to point out really quick here is the subsector column. I wanted to show you how wrong this can be, and I'll tell you. So we're sourcing this data from a third party, so I won't say who it is, for the subsectors. And I want to show it because it shows how bad these third party kind of information sources can be when they're looking at these nanocap stocks. So I mean, if you look at some of these, you'll recognize FitLife, FTLF. Is it personal products? Okay, yes, but really it's nutritional supplements, right? And it's sports specific supplement products. So what we're gonna, and if you look at even SGRP, SGRP isn't really advertising; it's more brand management, helping retailers have better brand merchandising at their locations, and then collecting data for them on that. That's not really advertising, but that's how they do it. So our index is going to really start now digging into these names more to get a much better kind of representation of what they really do, which will take a lot of manual effort on our part. So that's something I want to really highlight here. But if you look at the top 5 movers, so one thing that's really cool is we have now, we just started doing this about a few weeks ago to see how our index is performing, so we can help us maybe do research here and there and see if there's stocks in there that we should be looking at. Now our goal is like to see if the stocks they're going up, deserve to be going up, and stocks are going down, they deserve to go down, to see.
Well, Maj, let me cut you off real quick. Like, how do we define weekly movers here? Are you talking about, is this is for last week, April 1 through 5? Like, they stock price, I mean, they went up, the SGRP went up 92.9% last week. Like, what it did? Jan?
Yeah,
Yep.
it did. And what's cool about this too is
What the
It's
fuck?
from the index, yeah. So just to make sure, like, I mean, the weekly movers are just from the Cliff Note Index, right? The Tier 1 quality index. So
Right.
we publish our research, we add it into the index, and we track it on a weekly basis. And yeah, SGRP went 92% up. Yeah.
and that's been on the index for a little bit. And every stock here you see will also have a cliff note with it, so you know why we added it. So
Okay.
the cool thing about it is, even though I added it maybe 2 years ago or a year and a half ago, I can go back in my cliff notes and say, okay, well, what the hell's going on now? And what was interesting in our original cliff note, we kind of talked about how the corporate structure of the company was a little messy, which would maybe depress the valuation, and something they should take care of at some point. And the reason it went up last week was because they just did that. They cleaned up, like, they sold one of their assets. I think it was a joint venture that had like a Brazil and South African kind of exposure. And they just basically sold that asset, raised it like 20 million in cash. It already had 10 million in cash on the books. So the stock was, at a buck. We probably should put the prices in here next time, Jan, to have the prices in here so we can just show what the prices are. I think like a buck 30. And when you did it was selling it basically almost like cash. And what was crazy, that move to 92% didn't happen in one day. It was multiple days, which was kind of cool too. So you could have bought the stock
on decent volume too. This isn't just like a liquid.
Crazy volume.
Yeah. Okay.
So now the issue. So basically, what you had here was you had a re-rate. I mean, from a trading, a book under book maybe, or at cash, to maybe a little higher now. So now the next question for the company is that we will be asking MS. And so I already put a call into the company because I want to interview them now. Is okay. What are you gonna do with all that cash now? They already put a dividend in play. I mean, sorry, they already put a buyback program in play right away. And now they have the cash to maybe be more acquisitive, to maybe ramp up growth a little bit. So my next goal now is to see, can they get the next level of re-rate and evaluation by proving they can grow the company? And that remains to be seen. And how profitable they can be doing it. I think they actually are. We're already forecast to be profitable before this move. Now, what's cool too is that they would be in this customer experience category. Industry, well, like they're helping clients understand their customers better. And if there was a time where that industry was the outlook wasn't so hot, as you can imagine, during inflation and the fear of recession. A lot of companies were spending money on customer experience, not understanding where the economy was going to go. Now that we maybe avoid the recession, who knows? I think there's a little better feel from customers. So they're maybe putting more money in customer experience. And if you look at the stats, customer experience, I think, was when you look at marketing managers at companies, now has become one of the biggest areas of spend they want to do moving forward. So now this might turn into an interesting growth play, if that's right. So that's I own it, by the way. I should say I do own some SGRP. I bought it last week on the news there, and we actually, issued an alert out. We covered the news on Geo for us, and we put an alert out to our MSM Cliff Notes that we were, looking deeper into this. But it was cool to be able to bring that company from the Cliff Note. Look what look what we wrote. Look what's going on now, and kind of give us a framework. And that's what's great about Cliff Notes. These Cliff Notes, if you don't buy a stock on day one, if it's in your watch list, you just have a reference point where you can go back and check it out. And that's, this is proof one in like a
for sure.
time.
No, and that's why this is kind of fun for us to try out and do on a weekly basis, because you see stock going up 92.9% in a week. That warrants discussion and a deeper dive into why exactly that happened. So that's pretty cool there. Full disclosure, I do not own SGRP nor any of the stocks that we're going to be talking about here today, as part of the movers or decliners or whatever, what have you. So
by the way, right, that's just a nano cap company with Fortune 500 clients, real revenue. I think over 100 million in revenue. I'm not sure off the top of my head.
Gotcha.
But,
okay.
Yeah.
So, two others that also stand out on here. FTLF, obviously, that number of folks that we all know have been talking about that name, FitLife, for a little bit here. So, the move, as compared to SGRP, not as crazy, but, over the two-year percent change, it's up almost 200%, 180.22%. In your opinion, what are some of the reasons for what's going on there?
Yeah, cool. And FitLife was added, I think, to the portfolio back in, maybe you could pull that up, Jan. I think it was in 2022, maybe, or 20. I can't.
So yeah, September 22.
Yes. So again, another one of those situations where we had it on there, and we added it when there was some kind of FUD there. Stock was going down. Was on the OTC. There was fear that they weren't going to be able to list on the Nasdaq. They had some, I think, restatement of financials. But we use that as an opportunity to take a closer look at it, because up until then, Dayton Judd, who is the CEO, his turnaround has been immaculate when his turnaround story, and we got a hold of one of his shareholder letters where he talked about, hey, don't worry about this, we're still on track to get everything up to date and still have goals to be in the NASDAQ. And we believed that they talked about making an acquisition at the time. They were looking for acquisitions that would significantly grow the size, double the size of the company. And shortly after that, they made one. So that was the table that was set. Fast forward now, they're back on the NASDAQ now. Or I don't know if they even were. I think they're on the NASDAQ for the maybe first time. I'm not quite sure. And they made it. And the cool thing here, they also acquired some assets from MusclePharm. MusclePharm was a company went Chapter 11. I'm sorry, actually Chapter 7 bankruptcy. I mean, I used to own MusclePharm actually back in the day. It turned out to be one of a bad investment for me. MusclePharm was going through they're another kind of sports nutrition company. Has had some really checkered history, pretty bad balance sheet. And when I came across it on Geo, actually, that was in 2020. They were just maybe first quarter 20. They were just going through the restructuring was kind of getting to a place where it looked like it would be profitable. And they actually broke even. I think, or made a penny or something. So we decided to take a look at it, interview the company, and we kind of believed in their restructuring. And inflation comes along, they didn't manage their gross margins correctly. That was the excuses they gave. Long story short, it looks like there was actually some fraud that played out there apparently. With the financial statements, company goes bankrupt. Apparently, so Dayton Judd takes an opportunity to go maybe buy some of these assets out of Chapter 11, Chapter 7 bankruptcy, because a lot of these brands had really good cachet. The one thing that MusclePharm did a good job of was wasting a lot of money on endorsements. Tiger Woods and other to really grow revenue at one point and not make money, but at least build the brand. So Dayton has the advantage of that brand already being built. So now he's going to take these assets, which he bought, I think, for $20 million. I'm not sure, and now put him right through the FitLife kind of distribution, kind of marketing platform, which basically is now mostly online. When Dayton took over, it was more brick and mortar with GNC. And he factored the receivables and decided to make an online kind of strategy. So now he's got this really nice plug and play kind of model. Looks like I talked to Dayton once or twice actually. He's really focused. He knows his KPIs and he understands the marketing of this business so well. And really confident that he's going to make this work. So the cool thing about what we like here, they just reported some good numbers. I think it was Q4 numbers, which the market didn't react right away, which we couldn't believe. But he did kind of disclose some information about MusclePharm and how they're going to start bringing those products online now. I think the first one's a combat bar, which I think at its peak was doing $25 million in revenue. And what Dayton also said in the release was that it looked like that should be done with very little OpEx. If you read the conference call transcript, actually, it talks about that. So there should be this really nice layering on revenue. He's being very conservative in his guidance on the revenue with very little expense. So you're going to have this operating leverage coming from, if you start doing the math, you can start getting the 40 to 50% EPS numbers on a quarterly run rate basis. Stock selling at maybe $28 today. If they're going to $2 run rate of earnings, this could be, at some point be easily a 25p in this thing minimum, I think, because it's going to be the maybe leader in the pack, and it's a $50 stock potentially. Even right now at $1.50 trailing earnings, you put a 25p, on that, it's still significantly, I think, the high 30s, right? So that's basically where we're at with this one. And then the cool thing about this is is this one of those lessons in nano-cap land or multi-bagger land where some of these operators just get better as time goes on. This is one of those. I put a tweet out sometimes it's awesome when you buy more of a stock you own after multi-bagged because you're getting this extra confidence. This guy has kept performing. So the confidence actually build in him as the price has gone up. And a lot of people will look at a chart and say, "Well, I'm not touching that stock because it's gone up." But that's kind of what the story is embodying. It's looking really special right now. And he's got more acquisitions to do. So one thing we did do. So now we have all these, and this is what we're going to talk about later. I'll just do it now because it's a good time to talk about it. is that because we have all these 80s, we have all these stocks now, we can start going out there and start looking at like these what we call spotlight stocks. And FTLF was the first spotlight that we picked out of there, out of all 87 stocks. We basically put a tweet out, hey, we are looking for one stock to highlight. Who's it going to be? And we decided to make it right before they released their earnings, or maybe was it before, or maybe after, because it's not going to move. That was our spotlight. So that's, I guess, already up maybe 12% since then. But that's an interesting kind of the long story of FitLife.
No, for sure.
I have no short stories, Bobby.
I was just gonna say, like, I think how we'll do this, we'll try not to go through every single one on each of the mover slides. We'll pick out one or two based on, things that stick out. Obviously, FTLF has been a microcap, cult stock for how many years now? And then, of course, seeing SGRP, going up almost 93% a week, like that bears discussion. And I think we covered that pretty well. So, I invite anybody who's listening into this, check out the video version because we have the slides up there. You can check out all the top 5 just so I can read them out. Was SGRP, that was up 92.9%. FSI was up 20.2%. QBAK was up 17%. FTLF was up 16.6%. And NINE was up 16.1% on the week, April 1 through April 5, 2024. And let's move to the next slide, and we'll pick out one.
I own SGRP, I own FTLF, and I own some QBank. And I will throw this quick one-liner out. If you're interested in the AI kind of looking for legitimate AI stocks that are going to benefit from AI, QBank is an interesting one where it's basically does off the cloud or off-site storage on disk drives and stuff, tape storage drives. So basically, it's playing in that whole data is coming at us like at 100 miles an hour. Some of it has to be stored, off the traditional ways, and that's what QBank is doing. So it's having a resurgence in business because of that.
Yep. So quite illiquid as well. It made a move.
Very illiquid, which
very illiquid. Yeah, I know, but you love the illiquids. Hey, Jan, I gotta ask you too, man. Do you own any of the? Okay.
Yeah. FTLF is for me out of the 5.
Got it. All right, let's go to the next slide. Let's see who wasn't so lucky last week. All right.
Yeah.
So, all right, a couple things stand out here: CMTL, NXGL, CDTI, SVT, and FALC. Hey, actually, NXGL is going to be presenting in Vegas April 30 through May 2nd, 2024, if I could throw a plug in there. So, a couple things stand out here. Okay, these are moves that happen throughout a week. 23.3% for CMTL, down 21.2% down for NXGL, 16.2% down for CDTIs, 12% for SVT, and then 11.7% for FALC. So, I mean, for you, Maj, what stood out the most amongst these 5 as to, these various moves?
Yeah, I'll wrap it. So CMTL was one of our worst performers in the index, actually, in general, and we got caught off the guard. It was we thought it had a great earnings momentum coming up, great estimates, great backlog, great long-term contracts. The CEO at the time was this is a relatively new entry for us in the index. Was basically restructuring the company to have more longer-term visibility. The big elephant in the room was a lot of debt coming due financing in I think October of this year. We added it to the index at the end of last year with the bet, and they will fix the debt problem and refinance because of the comments they made publicly about being able to do that. We believed them. We were wrong, and stock is going down now because they passed the time where the CEO said they would restructure by. He got canned. So now that's what we're dealing with there. But it will be very interesting at this now. We like these buy and pullback opportunities. We like looking at a lot of these stocks that go down, which is why we follow the bottoms too. Is there any opportunity in the bottom? So I think at some point, if they do restructure this thing and they can get it done without too much dilution, it will be a really interesting thing for me to get excited about at some point. NextGel, don't own any NextGel. I don't know if I own any CMTL. I don't think I do. Maybe I have some options, but I don't think I do, Bobby. That's how I was playing that for a while. NextGel, they make this gel that goes into like medical devices or the pads. You put like on your transdermal pads you would put on your skin. To administer medication. These things. It's relatively new to our index, and we're just following it because they have some insane earnings per share potential and estimates because of a deal they linked with a large pharma company that wants to use their product. I'm not a big fan of their investment banker. I won't say who they are. So, but so this one is a risky stock that we put on here just in case, because if the numbers are right, now this stock is about $2, and I'm putting this a very low probability right now. But if they are right, the stock's probably a $20 stock if they hit those numbers. But I'm getting a little suspicious in terms of their ability to start really. I'm looking into that contract that they have with that company to see if more about it. But the one thing that brings up by the cool thing about an 86 stock index, and you have this divergent index, you can have these speculative bets and have it not really hurt your index. The average index is still, we're up over 40% on average. So, but we still have these losers, and it makes investing fun for us because we can do things we normally wouldn't do. For example, on Geo, I'm trying because I can add more of these kind of speculative and fun mixed stocks in here. CDTI, really quick, is not an auto parts equipment company, by the way. It's a nano materials company. Totally dark company. I wouldn't pay it. It has a big spread. They report their earnings once a year, so this is one of those really illiquid things we just try to throw in there because we got a lot of stocks.
Throw in because we can.
because we can.
No, not that it meets your criteria by any means. No, we're just going to throw,
But it actually did meet our criteria to some degree, but these guys don't put out financials, so like they put it once a year. I mean, I don't even. I think they're due now, and
how
I
lucky
tried to
are
call a company a few times, but I said, why not?
How lucky are you to have an index that's so qualitative? You can just throw it in there where you can. Here I am, just like have to,
It is up though a lot though, but I think it's the liquidity of it.
Got it.
SVT, I don't have any. I didn't really look at SVT. I think that's an activist kind of restructuring going on there. Falcon's an interesting one.
Do you own SVT or CDTI?
I don't own SVT. I gotta get back to you on CDT. I'm gonna actually, Jan, can you text Manuel? Maybe message him, see if I own because I can't use my computer here because I'm long story.
Okay.
Yeah, if I own a CDTI.
Okay.
And if you look at Falc, actually this is a stock we added early in the index's construction. And this one we added was because it was a typical situation where a company was going from a on-premise or more of a lumpy licensing software model, selling a one-off license, big money, and it's lumpy, to recurring revenue model. And I think now that transition has kind of been even though it's on the big mover list at the bottom, it's been hitting highs recently. It's just been pulled back. But they do cybersecurity type of software to protect data. And now I didn't look much into it originally. Now I want to. And then went back to my notes, check it out because of what's going on. And I went to their filings and they mentioned some stuff about AI in there. So I definitely piqued my curiosity to some degree. So we're looking into that a little more now. And I do own some FALC.
Got it. Okay. And then Jan?
Yeah. On me is just Falk actually.
Very cool. All right. And next slide. Let's see what else we got is on the agenda today.
Right. So basically, again, what we're doing here, we're trying to start, now that we have the 80 some stocks in the index, we got 2 years of returns on our back. We can start analyzing the index, see what more we can do with it to make it easy for our subscribers at MS Cliff Notes on the Substack to consume, because it's a lot to consume. And now the value add stuff we'll be doing now is breaking down this index into sub-indexes, getting better with the industry tags. For example, we created an AI index already. We're going to create a dividend index soon. And we're just going to keep on going with that theme to make it much more consumable. We're also going to start nimbly doing these spotlight stocks, which I just talked about with FitLife, FTLF, which I disclosed I own, to see how that works. But this is more of this really isn't a stock picking. We're not out here building, stock picks and rah, waving our hands. It's really more of a platform to help investors understand how to write cliff notes and how they can use it in their own journey if they're newer investors, or experienced investors start sifting through this universe to find their own stocks. And with doing everything we can to make it easier for that, once in a while throwing in maybe some of our higher conviction thoughts throughout the index.
Cool. All right. Well, I think that was really cool of us wrapping through this first wrap up of top performers, decliners for the week. I mean, any high level, what would you say is your number one high level takeaway from last week in terms of performance amongst these 86, now 87 stocks? Any notable outside of, let's say, the top 5 or bottom 5 that had some interesting earnings that maybe just the market didn't recognize, or earnings that you were surprised that the market recognized in a positive and or negative way?
Yeah, I haven't gone through breaking the earnings down yet, Bobby, of the whole index yet. So maybe that'd be a good conversation for next week.
100%.
This last week's been really busy just going through all the earning reports, and now it's time to go back and analyze them. One thing that was interesting was Hammond Power, which I don't own anymore, HMDPF, which we actually highlighted on Geo. MSM, it was one of the stocks we took from MSM to put on Geo, which is a great performer. I think we highlighted at $13 on Geo. I think it went over 100 recently. So it's basically we're trying to get our first out, our 1,000%er. And right now that leads the index at like 700 and some percent, I think. So Hammond Power is a great case study because it was a nano cap with big cap revenue approaching $1 billion, reported at that time maybe several quarters in a row great earnings growth, was selling at a PE of maybe 7 or 8, or maybe around 10ish, and just no one cared about it. And they were going through an expansion in the reason we liked it so much, because they had that already 3 or 4 great quarters in a row. They were going through an expansion in their manufacturing capacity to significantly increase sales capacity. We've noticed that analyst estimates didn't take into account in their estimates that potential extra capacity. So we prefaced that earnings would continue to grow. And our thing was, we wonder can we get a double whammy? Can we get the earnings growing while the PE is also expanding? That's what you want. The stock got to $40, still a PE of 10. It didn't expand. And now it's at 100. It finally got to over a 20 PE. That's just a perfect example of what you want in a GARPish, boring nano cap. This low PE stock that can grow its earnings and get a re-rate in the PE ratio also. It's the perfect setup that you want. So we want to find obviously more of those. And it also goes against the whole all nano caps are crap, because this was a legitimate company with legitimate revenue, with not a lot of shares outstanding, not crazy shares. It was liquid enough. But it was just a great multi-bagger story, man. And it shows also you don't have to be an investor for 10 years in the market to find a multi-bagger. We are trying to find stocks, and that's a really key point here, Bobby, why we look at earnings all the time and why we have qualitative and quantitative factors for the index. It's really important. We are trying to find stocks in the meat of a growth cycle. So Jan has created the tier 1 universe, which I don't know how many stocks it is right now. And from that tier 1 universe, we're creating a tier 1 index, which is maybe at the time, maybe the more, I hate to use the word timely, but stocks that are going through these meat of a growth cycle or a new catalyst that should re-rate the growth multiples or PE multiples or cause more growth. You put those all together and it works. So you can have these short-term gains while you're waiting for the long-term multi-baggers too. The index gives you this whole opportunity to have both of it going on, short-term stuff, long-term stuff. And it's just I think it's going to get better with time. That's why we're seeing it accelerate. But of course, there's going to be a crash one day. It's going to be a very sad day for our podcast. Well, it's going to come down. But the cool thing about that is that when it comes down, we're going to have a hunting ground to go hunting when everything falls apart and when this index is, maybe negative one day, which we expect it to be one day. It's going to happen. You just can't avoid it.
Yeah, but why are we going to talk about that right now? No.
I'm sorry.
Crash. No.
I don't want to jinx it.
It's already been a 3-year shit show for microcaps. We're talking crashes now. Come on, man. We're still sifting through the rubble. of this time right now. Come on, dude. Very cool. Well, no, I'm excited to keep doing this and digging through all these various ideas and going through the tier one universe and whatnot. So we got more to talk about. I think you wanted to go through like some examples from go to the next slide. Yeah,
I want to
InfoArb
talk
Classic.
about.
Okay, let's do this.
So no, we only have the in the beginning of this podcast the MS MicroCap disclaimers. We do talk about Geo, so if you're watching this podcast, understand that Geo has its own set of terms and conditions that you agree to them if you're watching this or listening to this event, and you can visit them at geoinvesting.com to read our terms and conditions. If you don't agree with them, hang up right now. Or so. One thing I wanted to talk about really quick on the Geo side was information arbitrage. I kill that word all the time, right? I beat it to death, but it simply is being able to take information in the microcap space that goes unnoticed because everyone's ignoring the space, capitalize on public free information, buy a stock before information is found out by anybody else, and then make money on it. So I just want to throw a few cases, a case here. Crawford, CRAWA, a diversified industrial company, is a company that's been on Geo for some time, one of our better performers now. I think it's gone from $10 out of over maybe $40 now, 47, I think, recently. I do own the stock, by the way, have for a long time. And this is an InfoArb where they put out an 8K. Now, the company has been growing their earnings for a few quarters. Stock was really moving that much. And I think it's selling under a 10 PE. And the company puts out this 8K where it talks about them approving a buyback program out of the blue of $7 million of stock prior to June 2024. And this release was put out during 2024. I don't have the date here, but that was pretty bullish. And then also, now this is basically the creditor of the company basically giving them permission to do this. They also let them basically give them permission to increase the amount of dividends they can pay if they wanted to pay them in the future. So the stock just sat there like at $26 forever. And we even tweeted it out, and no one even cared. I mean, people cared about it, but the stock is still sitting there and didn't do much. Basically, the company begging you to buy the stock. Then I guess they eventually end up putting out a press release when no one listened to them, the 8K, and a few weeks later or 2 weeks later, they put the press release out. More people saw it, and then now the stock's $40. So this is just a great example of how information arbitrage works. And dude, it's happening more now. It's happening more than I've ever seen it. You would think that it's getting more efficient in the space. It's getting less efficient. And these time lags are getting incredibly even longer, not shorter. Some of these illiquid, especially this value trap type, looking names that have low PEs and stuff. So that's a great example of one. Here's the chart of it. You can see there. TAYD is another one. Tailored Devices. This stock makes structural kind of equipment, basically to help stabilize structures and maybe buildings or even equipment. So the commercial markets and the defense markets. Part of what they do a lot of work in California with structural work of buildings because of earthquakes. And this interesting setup here I want to talk about was January 10th. This is on Geo. We highlighted the company. Had a decent quarter, not great quarter, but buried in the release was a comment about the company buying back $9 million worth of stock from a large shareholder who actually made a bid for the company, and obviously failed. So the stock opened up barely up in the morning. You could have bought a bunch of stock, and then it just went up and ripped the rest of the day. That was $27. Stock today, I think. Then we had the earthquakes last week. Stock had $60 last week. On top of another good earnings report. So these companies, they telegraphing this stuff to us, and they telegraphed this stuff like $30 ago. That they think. Now the cool thing about a TAYD, for example, is it's been one of these like sleepers for years, been around for years, not really progressing that much. You know, staying profitable, growing revenue, waiting for that one moment. And if you were able to identify that moment, you could have made a good amount of money. Basically understanding that the past has changed. It's not, the future is better than the past and not the status quo anymore. And if you're an investor who won't do that, there you go. So this would be a stock we should have had in the index. Both of these we didn't have in the index. Or I think maybe CRAWA was, but TAYD wasn't. I gotta go back and check. I own both of these companies, Bobby. So you know.
Beautiful, thank you. I think if you're watching this on YouTube, by the way, not to take away from everything that you just said, because I think you did a great job in highlighting both of these. Full disclosure, I'm not a shareholder or anything, but it's kind of funny. Jan keeps going in and out, but I feel like it's from the eclipse. It's
it's
interrupting him right now.
No. Sorry about that. My video died for some reason. I had to switch it, but yeah.
Don't worry about it. You're good. Cool, man. All right. So Maj, we're coming up on I think 40, 50 minutes here. Any closing thoughts for this week? Anything to look forward to this week before we call it a day?
Yeah, I just want to put a shout out, by the way, to the Twitter guy here, Mudlark Capital. He did some work on TAYD, which we noticed, which basically implied that maybe the company could see a double in its revenue base. So that was some cool InfoArb that he did work on the stock himself. So he's at Mudlark Capital on Twitter. I think that's really I want to talk about value traps. Maybe we can do that next time.
I think so. Yeah,
we'll talk about how the value traps are we rating in the market and how we think this is creating an incredible opportunity for investors who are willing to go against the grain a little bit.
Very cool. Hey, Jan, real quick on TAYD or CRAWA. Do you own either of those names?
Like for this week, I own both of them.
Okay, cool.
Do you hear me well?
Yeah, I can.
All right.
Yeah, I can. Perfect.
Yeah. And I think for us on the Cliff Note side as well, on the Tier 1 Quality Index, we're going to be really drilling down further into the index, creating the AI index, and really having a bunch of cool stuff coming in. So I think we're really getting there, and being focused on how to extract the most value out of it.
Excellent. All right, dudes. Well,
I own Mule and I own SGRP. I do not own Verk. I missed the 300% move on Verk. I sold it before it went up. So you know.
Yeah, they were in our index for a couple quarters in a row there, that's for sure. Not a shareholder in any three of those. Well, listen, I think next week we'll do a review, and then also I think we should do a quick little sound bites on you're going to be doing the Tier 1 track in Vegas for our conference April 30th through May 2nd. We should go through a few of those names that you're going to be doing Q&As with as well. I think that would be a lot of fun.
Yeah, sure.
Cool. All right, dudes, where can people go and subscribe to MS MicroCaps newsletter as well as to GeoInvesting?
Yeah, so the MS newsletter is on Substack, and they can just go find it there. And GeoInvesting, you can go to geoinvesting.com, and you can take currently a free trial. We don't know how long we're gonna have a free trial up, but for now it's a free trial. Our membership has been growing pretty nicely the last couple months. A really big escalation in it, so we're not sure if we're going to keep that going. But anyways, that's where you go. If you want to reach me, you can find us on my Twitter handle at Maj GeoInvesting. You can find GeoInvesting at GeoInvesting, and I think we have a Twitter handle now too for MS. MS
MicroCaps. Yep.
MS
cool.
MicroCaps. Yeah.
Very cool. All right, dudes. Well, thank you again for this. This is a lot of fun. I'm excited to keep this up, and have a good week. Best of luck to the index, and we'll go from there.
Hey, thanks, man.
Thanks, Bobby.
Later, guys.
Thanks.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.